Okay, good morning. This is November 3rd, 2022. And this is a market review on where I think the markets are going. Now, of course, doesn't mean you should trade the markets because you might be a trader, investor, long-term, short-term. So this is just a general idea of what I think, and this is how I trade. Just a feeling that I have. I have 23 years experience, so it seems like the markets, they follow a pattern. It doesn't seem like it. They actually do. They follow a pattern that's very consistent. In the last 23 years is what I've been looking at. I haven't been trading like this for 23 years because it took me a while, actually, maybe a couple of years, few years to actually get this down. And even then, I had to perfect it. I'm still working on it too. But anyway, it's a system that I use, and it's pretty accurate for me. So you got to remember, these markets are, there's only two things about them. You're buying and you're selling. You're buying and you're selling. You're buying here and you're selling there. And that's all this market is about. There's some people that think that the markets are about the news, what's happening with interest rates, inflation. They do a lot of analysis. They check to see if companies, if they're buying stock, they're seeing if the company is strong, if they're making a profit. And actually, none of that really matters. And that's because this market's only about buying and selling. In the 2000 crash and 2008, there's a lot of companies that were losing money, and their stock was going up. And as it is now, these stocks are way overvalued, sometimes 5 to 10 times overvalued of what the company's actually worth. So it has nothing to do with the worth of the company and how much they're making. This has to do with making money. And there's people on the other side that have been studying these markets for a long time, and they know exactly how to move these markets so they can basically take your money. I mean, it's nothing sinister going on. It's just, that's business. It's how they do things. And if you learn the markets, then you can learn what they're doing, and you can actually make a lot of money doing this. Okay, so let's look at the market. I keep track of a bunch of the large stocks that are they're under the S&P and the Nasdaq, and these are pretty big players here. Take one, Amazon. Here's an Amazon stock. Let's go into a 5-year chart. Here's a 5-year chart. So if you see here, I drew this line here a while ago. And what this line is, this is when the market's above it, it's called a support line. And when the market's down here, it's called a resistance line. So it's a resistance or support line because the market came down and it hit several times on a large time frame. Hit again here, so that builds this big support. And when a market breaks down below this line, which it did, then it starts to go in that direction pretty fast, and that's exactly what it's doing now. So this thing is going down really fast. Show you a longer term chart. The max weekly. Okay. So this back in 07, 08, Amazon didn't do a whole lot back here, and then it started to grow. Came up here. Had a little crash here in 2019, and then it came up during the pandemic, and it's way up here. Now it's coming back down. So how far can this go? It can come all the way back down to here. like it did in 2000. Went all the way down to, 10, 15 bucks, maybe even lower. So we got a ways to go. Now, this can all happen pretty fast, within a year. It can go down, and even sooner than that. But my feeling is that's what's going to happen. This is going to go down. I'll show you some other markets here. Let's try Apple. Apple's still up there pretty good. Hasn't crossed that line. Once it crosses that line, then it's going to be pretty much down from there. And so Meta's pretty big. That's been in the news a lot. And you can see it's already, it's going down pretty big. What's down to $90. And it was at 384. And I suspect this will probably go way down to here before it's done. And what else do we have? Netflix. Netflix has already come down quite a bit. And it's up. So when a market comes down, it's just like here, it is buy and sell, right? Okay, so people are buying here, they're selling here, they're buying here, they're selling here, and the same thing here. This thing went down pretty far, and now you got some buyers stepping in. Doesn't mean it's going to go back up. It's just doing its normal thing of buying and selling. It could turn around here, which I believe it will, because all these markets follow each other. And then it will probably come down and break down. And it was at $700. It's down to $273, and it might go down to $50. And could go down to $50. Tesla, same thing. Tesla's at $400. It's down to $200. And it could break this area and start heading down. Here's Microsoft, same thing, Microsoft. There's a big run up, and now it's coming down. So, why do I think it's coming down? Why doesn't it stay here and keep going? Well, there's a number of reasons. In 2000, we had two market bubbles. 2008, we had two, real estate and stocks. This time we have four. We have real estate, we have stocks, we have bonds, and we have commodities. And if you want to add crypto, that would be five bubbles. Never in history have we ever had that. We haven't had four, and I think we have five, actually. And so, because we have all of that, and everything is not only overvalued, but it's way overvalued. That means the market has to come back to where it stabilizes to what the companies are actually worth. So if we got four bubbles or five bubbles, that means all of them have to adjust. And, that's including real estate. Real estate's overvalued, needs to come down. So it's a natural phenomenon, what's happening, and it's actually healthy for that to happen. And it comes back down, then it goes back up. That's just the way the markets work. So if you're a long-term investor and you started investing here and you bought and the market comes all the way back here, then you're pretty much break even. But if you started to buy up in this area, which statistically most people invest in the markets after it's made 70% of its run. So that would be somewhere around here. And the market comes up and it comes down and you're already at a loss. Most people hang on because they think it's going to turn around and go up. Well, sure, that's probably going to happen, but not for a long time, because this market has to come down, and if it's going to be a pretty good size correction, it's going to take years and years before it comes back up. So a lot of people, they hold on, they don't sell. Again, if you bought down here, well then, yeah, I guess you can hold that, because it's probably not going to go too much lower than this. If it even comes, it might come down to this point, and it might come lower, but eventually it's going to come back up. But you're not really going to lose a lot in here. But if you bought in here or even here, you're probably going to lose quite a bit. So here's a misconception. You see all these stocks here, they're pretty big names. And your financial advisor is going to tell you to diversify. So it doesn't make sense because you're going to diversify into the same sector. They all move together. You can see all the charts that I showed you, and they're all moving together. So if you diversify, you're basically investing in the same stock, because when one goes down, they all go down. So if you really want to diversify or hedge, I call it hedging, then you're going to buy something that goes the opposite way of the markets. And gold's, gold, real estate, even though real estate's in a bubble, but at least it's something that's tangible, and it's going to be here. This right here, this isn't tangible. This is actually all make-believe. This is all digital. It's not really worth anything, really. But real estate and gold, and gold's, about $1,700, and it's probably going to go way up, maybe even $5,000 an ounce when this thing starts hitting. So, don't take my advice on that, do your own research. But there's ways to hedge, but diversifying doesn't work. I'm telling you, I've seen this over and over again, and people they consistently lose money when they diversify. You never see traders diversifying. It doesn't make sense to do that. They want you to diversify because every time you move your money, they get a commission. So they don't care if you're making money or losing money. It's every time you move it, as long as they make their commission, that's pretty much it. And diversifying doesn't work. So basically, the markets are in trouble. They're in big trouble, actually. So we're headed for a recession. Some people say a depression. And the only difference is depression is more extreme than a recession. And I would agree with the depression part. But, not all is lost. You can make money going down. And the funny thing about this is when people buy, they never expect to sell. And that makes no sense because that's how this market works. It only works from buying and selling. You're buying, you're selling. You're buying, you're selling. You're buying, you're selling, you're buying, and you're selling. There's no such thing as a long hold. It doesn't make sense. How are you going to make money? It's like if you own a store and you buy a bunch of shoes to sell, but you never sell them. They just sit there. You're not going to make any money. And so I'm not sure why people aren't putting that together, but that's what's happening here. You're going to have to sell. If you're going to buy some stocks, if you want to make money, you have to sell. So here's the trick to this, and this is what I teach, is when do you buy and when do you sell? That's the tricky part. And that's, if you look at my daily videos, I show you how to do that. I show you how these markets work and how to get into the market and how to get out of the market. But 90% of the people lose money in the stock market because they don't do that. They don't buy and sell. They're just buying. And when they're selling at they're buying at the wrong time, first of all, and then they're selling at the wrong time. So it takes education, takes knowledge to learn this, but it's actually not that complicated. That's all it is. It's just buying and selling. It's really that simple. The hard part is getting in and then getting out. Actually, getting out's harder than getting in because anybody can get in anywhere. And you can ride this thing all the way up. And then when are you going to get out? This is what I teach in my videos. These kids had invested in Bitcoin, and Bitcoin went straight up, and then it went straight down, and they lost all their money, millions of dollars. And some of these poor kids, they committed suicide, and that's what happens during these downturns, people just get so stressed. And you hear about in 1929 these business people jumping out of windows, skyscrapers are jumping out of windows committing suicide because they lost all their money. But if you learn how to trade these markets, invest in these markets, and know when to get in and when to get out, then not only is that not going to happen to you, but you're going to make some money, and you can make a consistent profit by learning these simple rules on how to do that. So for some reason, it's in most people's nature to follow and not really ask questions. You just follow. And if everybody else is doing it, then you do it too. I mean, we saw that happen the last 2 years during the pandemic. People are just following without even questioning. And that's what you need to do, especially when it comes to money. This is money that you've earned and maybe even worked really hard for 20, 30 years sometimes. And then it all can disappear in a short time. It takes maybe 10 years, 15 years to get up to this point, and it only takes a couple years, to get down here and to wash all that out. So you learn these markets, and you can make money. So trading isn't just buying, it's selling. And when you sell, you can make money going down. Actually, make more money going down than going up, because it always goes down faster than it goes up. And so you play both sides of the market. So both sides of the market is what? Like I said, you're buying here, you're selling there, you're buying here. So these people are playing both sides of the market. Most people aren't. I play both sides of the market. Market comes down, and then it comes up. And that's what it does. I can buy here, turn around, and I'll sell down here, then I'll buy here, and then I'll sell down here. And that's how this market is supposed to be played. It's like you're playing a game with somebody, you're playing chess, and all the chess pieces are on your side, and the other person doesn't have any pieces. It's not a game. You're only playing one side of the game. So you have to sell. You can't just buy. You have to sell, and that's how you make money. And then the market goes down to a certain point, and then you can buy here, and it goes up, and then you sell here. And this is where I teach you how to find these bottoms and how to find the tops. Now, it's not going to be perfect. We're not always going to find the bottom perfectly. Like I might find the bottom here, and it might move around here until it goes up here. So I got all this time that I'm just sitting on it. And then it goes up here, and then you sell. And that's what I teach on how to find these tops and bottoms, or at least as close as we can. And if we're wrong, we have to get out. So here's another thing. When I started trading, day trading about 20 years ago, my mentors told me then, they said, everybody who day trades has to, as soon as they get into the market, they buy a position, they have to immediately put their stop loss in. Because the thing about trading futures is you can lose more than what you put in. You can lose a lot more. And when you buy stocks, you can only lose as much as you put in. Same with options. But futures is a different market. You can make, I remember back then, you see $10,000, you can make $10,000 within an hour. And then all of a sudden the market reverses, you don't get out, and now you're down $20,000. It happens that fast. But if you put your stop loss in, then you can minimize your losses. So I'll make a video on stop loss. But basically, since I trade options, pretty safe. You trade stocks, you're pretty safe because you can only lose as much as you put in. But of course, I never let it get to that point. So you can figure out, you got to figure out what's good for you. If the market goes up, let's say you bought here or you bought here, and the market goes up and it turns around and it comes back to break even, if it goes below, let's say 10% or 20%, you get out. You can always get back in. Most people won't do that. They just let it drag all the way down. So you have to figure out where your stop is placed. It can be a percentage point. It can be a dollar amount. That's totally up to you how much you want to take a loss. Now, of course, that was something I had to figure out day trading, because the market would come up. I'd set my stop loss too tight, and I'd get out, and then the market would go back the other direction. So it's kind of tricky on where to set your stop loss. With options, it's not so bad, because I use a lot of intuition, because I kind of know where the market's going. And if it reverses, I always buy close to either the bottom, and if it reverses and goes, if I'm buying call options, reverses, goes down, then I don't lose that much. My stop, I'll just lose whatever, a few hundred, a few $1,000s, depending on how much I put in there. So anyway, the point is that if you are a trader, professional trader, you're going to have a stop in there, always. Like I said, that's the first thing we do. We set the trade, and immediately we go and we put our stop. And you don't even question it. You just put it in right away. So I have a mental stop, because, like I said, I'm pretty much protected with options. But futures, the market starts hitting these moves like this. There's people that lose millions of dollars just in a day, in a couple hours. But you could make millions of dollars the other way too. So anyway, the point is, if you're going to buy, you have to set a stop. And I don't care what your financial planner says, because they don't want you to. They want you to stay in the market. But you set your own stop, and you say, I'll only take a 10% loss or a 15% loss. And then you get out, and you can always get back in. There's never a chance that you don't have that you're not going to get back in. And anyway, that's good practice. That's the other part of this game, is buying, selling. You can't buy and not sell. That's the point. You have to sell. And if you're going to take a loss, take a tiny loss, as opposed to letting the market go all the way down and losing everything. And I've done that before. I've wiped out my account several times, and it was pretty stressful. Okay, so overall the market looks like it's going down. And like I said, I would recommend, and I don't give recommendations, but this would be a safe recommendation, that if you're taking a loss and it's more than you want, I wouldn't go any more than 20%. I would get out of the market, and don't even think about it. Just walk away. And if the market turns around and goes up, you can get back in. But it doesn't look like it's going to do that. It doesn't look like it's going to do that for a long time. And like I said, we're in an extreme case right now. Never in history have we ever been this extreme. So whatever goes up, and if that's an extreme, then you can be sure that when it comes down, it's going to be the same thing. So extreme cases happen on all time frames. Whether it's a 20-year chart or a 5-minute chart, you're going to get the same exact patterns. They're going to look the same. And so here's the Dow. This was an extreme. It went from here, and it went straight up without really correcting. It did a little balance area in here, and then it took off. And then it was close to this line, and that's what made me take my position in the put options, because I knew it didn't have that much more upside. And if it did, it had to at least go down and correct before it goes up, because it always does that. It goes down, goes up, goes down, goes up. So if you look at this, how fast it went up in like a couple weeks. This one here took what, a month, 2 months to do that. This one in a couple weeks. So That's an extreme case, so you can say that's kind of like a mini bubble, and then it's coming down. So I would read the long-term charts, like the one I just showed you, exactly, or read this exactly like I read the long-term charts. And like I said, it's very consistent it on all time frames. And this is what's happening here. We're having a mini crash right here. And if you take the NASDAQ never broke out of its balance area. And that goes to show that it's got some weakness there, you know, and that's why I think that this is probably going to start heading down this month. I think this month is going to be the big turnaround, but we'll see. Like I said, I'm not really putting my money on that because I bought some put options here for the market to go down. I've already made some money, but they're December, they don't expire till December 22nd, so I've got plenty of time. And if this market came back up to break even, I would probably still hold my position. But if it came up here, I would probably get out because that means the market's going to make another run up. And I would take a small loss because I bought right here. Now, if I bought here, that would be a different story. Bought here thinking the market's going to go down and then it reverses, go up here. That's a big loss right there. And that's how people trade the market. They get in at 70% of the run, and it goes up, and then it comes down, and it wipes them out. So 90% of the people lose in the market because they get in too late, and then they don't sell. So there's a lot of strategy to this. These markets are controlled. These people on the other side, they know what they're doing. And if you follow along with them, you can make a decent living. Okay, so I hope I explained this well. I have all this in my head, so sometimes I'm thinking from at the level where I'm at, you know, after 23 years, and so trying to explain this. I have a friend that's, she said she just gets really confused, and so she wants me to break things down. So I'm making more and more videos, and I tell her just look at these videos, and then she'll get it, along with other people will get it, and hopefully I can, you know, I get feedback, then I'll know what to say and how to explain it in more detail. So that's it for now. I think I'm going to do these market reviews probably once a month. I'm thinking, you know, maybe every 2 weeks. I'm not sure, just to keep you up to date on where the market has gone and where I think it's going, and just give you a better perspective or idea on what you can do if you're a long-term trader or a mid-term trader, and what decisions maybe you can make based on what I'm telling you here. Okay, that's it. Talk to you later.